Happy Sunday, everybody. We are going to dive into the weekly watch list that I have, and I'm going to kind of go over a few tickers that are going to be on my watch list. But one thing I wanted to mention to you guys is some of these names, are definitely setting up for a potential trade. However, some of them, like this first one that I'm going to explain to you, it's getting very close there, but it is definitely worth mentioning for me, for you guys to put on your watch list as well. So just to kind of go over the first one that I have right now, it is, you know, ticker FB, also known as Facebook. Okay, again, we are on the daily chart, meaning every single one of these candlesticks are equal to a day's worth of action, right, of trading session. So this one's very self-explanatory, guys. We had a monstrous earnings, right? They reported, had a nice big gap up, right? Hit highs of what, 331, per share, and then we proceeded to fade, right? It could be a number of factors, right? But the why isn't, that important. It's just the fact that, hey, we are selling off, and it is what it is, right? So it could be, traders collecting profits. It could be market makers just pushing this down because it needs to fill that gap, right? But regardless of what, what is happening, the trade setup here right now for me is to watch this below $321 and 80 cents. The 80 cents and whatnot is, it could be plus or minus, right? It doesn't have to be right by the penny, but as long as it beats down below that $321 per share, that's going to trigger my price alert. It's gonna put this ticker on my watch list, on my radar, to short this position, right? To buy some puts, right? And of course, when that happens, and according to sentiment and seeing how bearish for the day is, or for the ticker is, to see how much selling pressure is popping up in the tape, right, is going to be that deciding factor of how far off I will short this play, or how much of the fill am I really going to capture, right? Again, when you have these gap fill plays, and let's say it does happen, sometimes the whole gap does fill, right? And let's say we completely fill to around this 300, and let's just say $11 per share, right? And then we proceed to get this bounce back up, right? That is textbook play. If that happens and you capture all that, congratulations. But of course, remember, the market is continuously changing. You always need to adapt. So I'm not saying that when this breaks $321 per share, guys, that you can immediately short this for a week or two, and you'll eventually hit this $311 per share, have that gap fill, and then bounce from there. Okay. There are times, right, we have that partial fill. Let's just say it goes to half for this particular scenario, and then it pops back up, right? And then after that, it continues to fade. Okay. Whatever happens, right, it doesn't matter, right? For you as a trader to adapt on this particular trade, and how I would trade this is when I have that price alert set to break that $321 per share, right? That's going to put it on my radar. I'm going to have some puts, depending on when that actual date happens. I'm going to check the broader markets. I'm going to see how bad the day is. Okay. When I say the broader markets, I mean, check your SPY, SPY, your QQQ, right? Your /IM, whatever, YM, to see what the broader sentiment is, right? If we have a big fat red day and it seems like everyone's selling this off, I'm not gonna lie to you. I can up my risk a little bit and try to hold for this entire, gap fill. If I'm not trying to be greedy, guys, which I do always tell you guys, hey, our job as traders is not to capture the tops and the bottoms, is to capture, the in-betweens for the high probability, right? Even though you don't catch the whole thing, this is like a guaranteed money in your bank kind of scenario. So when that scenario does happen for Facebook, at least, I'm gonna watch for that break of $321 per share. If we have a huge bearish sentiment for the day, as in everyone is selling, we have a fat, minus 300, minus 400, minus 500 points, on the broader markets, I might up my risk a little bit. I might continue to hold this put play longer than usual. If it shows opposite, right, it seems like SPY's holding up, SPY's consolidating, SPY's flat, whatever it is, but Facebook kind of broke through, I might just collect profits here and there, to get in and out of the trade, to secure and realize my gains, right? But ideally, this is going to be a ticker on my watch list. Of course, I'm not saying it's going to happen this week, like I said in the beginning of the video, because we are trading at right now at $325 per share, about $4 away, from the $321 per share. So, you know, I know Facebook is pretty volatile, but you know, the intent right here is just to watch for that $321 break for potential, you know, put scalp, right? A put day trade, a short trade, whatever it is that you want to execute. But that's going to be my potential intent of the trade. If that does not happen, I probably wouldn't take the trade. Another factor or another scenario that you could potentially watch is if we get this bounce here, right? Of course, remember when it breaks this, that doesn't mean we enter right away. We always like to wait for that confirmation. So there's a chance that this could also fade, have this $321 hold as support, and then continue to run back up a little bit. Or if not run back up, we have a nice bounce, right? It could be like a dead cat bounce, right? Fade, bounce, and then have that continuation to the downside the next day or next 2 days, right? For that potential gap play. Okay. So keep that in mind that there's many obstacles and you know ahead for Facebook. I'm not saying that as soon as it breaks, it's going to gap fill entirely. But it is your job as a trader to be prepared when this does happen, because you know that could be the trade for the day, for the week, for the month that you know really establishes your equity curve, right? When you guys are trading. Nonetheless, I'm going to move on. My next ticker that I have on my watch list is Snap. Snap is kind of setting up. Not my most favorable, to be honest with you, and I also don't trade Snap that often. But you know, with the recent earnings of Facebook, Twitter, you know, all these social media apps and whatnot, you know, there's a lot of noise behind it, meaning there's a lot of action, right? So more action, more liquidity, tighter spreads. Also does look like it's setting up a little bit. You can see this in two ways. How I make this trade or how I put this on my radar is that when I pulled up the charts, I immediately saw this. Again, we're on the daily chart, a potential head and shoulder play, right? This is the left. This is the middle, the head, and then this is the right. Potentially, right? And I already had this 56, you could say $57 per share as a level of resistance slash support, which we did get that bounce off the right shoulder. So that kind of, if I just ignored all of this stuff, right? Let's say like the past week's action, just this bounce alone gives me higher conviction that we might have a potential long play here. Of course, we didn't hit that, right? We didn't catch it. I don't watch this ticker on a daily basis, but this head and shoulder play, sorry, inverse head and shoulder play, kind of would tell me that if we break this level of around $64 per share, we might make higher highs. Of course, it is also setting up in this pennant here where we might also consolidate for the next week or two. Regardless of what it is, it should still be on your watch list. If you guys like to trade Snap, you know, follow the flow, see how it actually ranges. If it continues to hold in this chart pattern, or if we actually hold and then we break out above, right? And we get that confirmation that, hey, we can make higher highs, right? A good price target would be 70. However, you know, again, these chart patterns aren't to indicate any sort of direction yet. These are very neutral patterns, okay, guys? Same as falling wedges and whatnot. Usually, if you have a rising wedge, right, the occurrence would be to fade off that apex break. If you have a falling wedge, right, opposite way. But for these pennants and whatnot, they're actually more neutral. So wait for that confirmation, wait for that break, and then see where the actual direction is, where the stock's going to be headed. But of course, like I said, if you want to trade this long, I'd wait for this break around $64 to $66 as a level of resistance to show that buyer strength is there and that this chart pattern is actually going to here to hold, right? If you're bearish, right, you want to see this break down, fold. If you're still not comfortable waiting for that break, you want to see this 56.86 level not hold as a level of support and to continue to see it fade below. That'll give you some validation, right, in the direction of the stock if you are short Snap. Next one is Netflix. Okay, so Netflix, similar to Facebook's gap up earnings, but this is a gap down after they reported, right? So after they reported, we had a nice big gap down. Of course, we're getting very close, actually a little bit closer than Facebook to where that gap fill could be intimate, right? Could be this week, right? Imminent towards how the broader market moves, imminent towards if another company in sympathy plays trade. but this is definitely going to be on watch as well. So again, the breakdown is I want to have a price alert. Everyone wants to have a price alert above this 515. Above 515, we see some sentiment strength in the broader markets, or we see some strong buying pressure in the tape. Then we'll have this gap fill. Of course, it honestly most likely won't fill the entire gap in one day. That probability is very, very slim. But I mean, like I said, usually when we start having that gap fill, the intent of the market makers to push this to fill as much as possible is more likely than it to just, not fill, right? So of course we always get that partial gap play, that secure some money, right? Realize some gains, break above here, get into some calls, get into some long. You can scalp this too, regardless of what it is. We're here to make some money. We're not here to capture everything, right? I want to repeat that over and over again because everyone that gets into trading, especially options trading, they come from long-term investing, right? They know the buy, hold long, buy low, sell high, hold forever kind of game. When options trading, you do not want to do that. You are here to actually make money, realize those gains, right? You can't be buying low, selling high, and thinking that you have all the time in your world to capture those gains. So keep that in mind. But again, of course, for this ticker, Netflix, right? NFLX, above 515, watch that for a break, hold as a confirmation, and then we can have that gap fill play to the upside. And that's a high probability play. That's a high probability setup. Okay. You can do other technicals, right? Where it seems like, the stochastics and whatnot are getting very close and it might actually want to have that crossover. Yes, we are a little bit far from it, which is why we want to get ahead of it, right? We want to be prepared when it does happen, right? Again, this might not even happen tomorrow, Monday. It could happen Tuesday, Wednesday, Thursday, even maybe next week. But as long as you have that setup ready on your charts to execute, you'll be ready for the play. And that's half the equation. So that's Netflix. Going into my next one is QS. I am actually still I'm still in this trade. I have not gotten out. Why is my charts like that? But anyways, just to go over QS really quick, I am in 28 contracts now. I did enter right at this bottom here, right? And then, I think some of you guys were in, or some of you guys saw the next day it would be up like, 15%. And of course, obviously, we fade, right? And then the gains were lost for the day. And then we pop back up, and then we fade, and then we pop back up, and then we fade, pop back up, and then we fade. So that's why the gains are up and down, right? I mean, in hindsight, right, in my QS trade, this is where I entered the day. I could have just exited the next morning. In hindsight, right, I would never know how this action would go. And then, of course, I would re-enter, and then I would exit again. And of course, I would be securing money, right? Rather than having my position go up and down, up and down, up and down. Right now, I'm currently down 15%, right? Which is an emotional roller coaster. But again, I'm still quite comfortable of where it is right now. So I don't want to jinx anything either, but I am still comfortable as long as it's 35.81 holds, right? Which it did pronounce to hold so far and thus far. Again, we have some May 21st contracts, which they do report earnings. Let me see where this earnings is. 511. So I do expect this kind of stock ticker to have a little pre-ER run up. So again, there's so many variables here that we can actually try and monitor to catch. Sometimes it doesn't work in our favor, but I think a big move out of this is we want to see this hold, and we want to see this continue to break higher. Again, my price target for this stock is $40. Okay, so I mean we're not that far off from there, and that's very reasonable if you think of it from a price action perspective, because having this run up to $40 per share pre-earnings, doable, right? The chances are very likely there. It's not like it's something ridiculous where you expect it to go to $54 or something per share be pre-earnings, right? No, that doesn't make sense to me. So this trade still is intact for me. I'm in about 7K. I like to cap my trades around 8K, right? So I probably won't add into it anymore. But we'll see how this trades throughout this week as far as this ticker. But the next one right now is Tesla. Okay, remember this long-term teal trend line, Yeah, we are still holding that above. Okay. And what fascinated me or wants me to put this on my watch list, even though I rarely trade it, I suck at trading Tesla, you guys know it, is that this is a big bullish engulfing candlestick, right? Meaning we have bullish sentiment here right off the bat off of Friday's action. Okay, I don't know what happened and what it is or what it was that, triggered this, but the fact that we opened, below, okay, and we traded as high and we closed above the previous previous day's action, plus it was after they reported earnings, right? Which honestly was pretty good earnings. It's really good, the best earnings ever. Gives me some sort of direction that, hey, buyers here are going to be pushing this up. We do have bullish sentiment. If I'm going to trade this, I'm going to only want to trade this to the upside. I don't care if I'm scalping, right? Most of the time I'm scalping, I'm day trading, but this tells me that if there's one way I'm going to trade it, it's going to be capturing it on a dip to the upside based off this data, right? And you can check out the volume here too, right? A lot of buyers here that came in Friday. So that could be on a watch list for you guys to see how we trade if we have a continuation to break this. Again, remember that 718, I still did not remove from my charts. Yeah, this was a nice level of resistance and support. If we can break back above and hold, hey, maybe we can go back to 781, right? But this one is going to have a similar setup to NIO because of the sympathy play, right? NIO has a little bit nicer chart pattern that kind of validates it as well, right? It was setting up. We kind of did break out of this chart pattern, and then we kind of started to fade from that 42. And then now we're almost bouncing, right? We're kind of retesting this as a level of support potentially. There is still no validation yet until we continue to see this, validate itself. But it is a ticker for you to also watch if you are liking that Tesla setup, right? Because this is a sympathy play because they had earnings, right? Similar to Tesla, they faded after earnings. And then after that, they had not a bullish engulfing though, but we did get that retest of the chart pattern. And now we're just waiting for validation or for confirmation to see if this is going to hold and we get a nice long run in this. But that's a side watch list that you can kind of put. Two charts I want to go over, all right? And these are the last two that are setting up, right? My favorite Boeing guys. All right, I'm looking at on a weekly chart now. So each of these candlesticks are a weekly, similar to what we started breaking off that COVID drop. Okay, we are actually setting up the exact same pattern right now. What do you know here? I do presume that we continue to skyrocket here. I'm long Boeing. I don't care what anyone else says, right? But Boeing is a stock to trade, to play. I have high win rate with this stock, trading this stock, even after earnings, right? They faded, but who gives a shit? They faded, and we're still holding up this chart pattern, which gives me, higher conviction to continue to watch this stock to trade. Until we get that break, this could be, I don't know, a month down the road and whatnot. But if we were to fade back here and get that $230 per share, man, I'm highly convinced to maybe get into a long position, maybe going fat, but maybe like 4, 5, 6 months out, and then just play this out. But of course, it's all about managing your risk, right? But of course, this chart pattern is very nice to me. This is like almost like textbook play. It's very easy to read, very easy to see where the support and resistance are, very easy to see. If you're not willing to risk that much, but you're willing to see how this chart reacts, right? If we break down and fade and we break this at $24 per share level, right? That's pretty bearish, right? Or if we continue to proceed, break above that $241, for a nice big bullish run, based off historical patterns, right? If you just look at Boeing, after a nice big, bull flag consolidation, it usually pops back up to the upside. Of course, we just had earnings too, so that's one catalyst that you can put away and forget about until the next 3 months or so. So this is definitely going to be a ticker for you to put on your watch list. Again, it doesn't have, the move might not even happen this week. It could happen next week, but as long as you guys are prepared, that is what you need. And last but not least, Palantir. Yes, I did get shaken out of my comments, so I'm not in any of this. I don't hold any PLTR right now, but you know, this could really go 50-50. This could be that corrective wave that we were talking about, consolidation, have that one more leg down, or this could be that nice big long-term support, right? Where I think that if we do continue to hold and bulls push this up, let's just say after earnings or whatnot, and we get a big fat run up, this is going to be that long-term support that will probably hold. Meaning, if we did fade back down to these levels again, I would be gladly to size up again. But I think this earnings report, this catalyst is going to be key. Just to imagine like how everything's been setting up. All the noise behind PLTR, right? People talking about meme stocks, people hyping it up like Kathy Wood, and let's just see, right? Let's just see. No one knows the right answer, right? If we did, then we'd all be billionaires. But I think this earnings report is going to be key to see how they play. Again, if they do fall and they do break down, I am actually willing to buy and re-enter comments. not to be bitter and salty and whatnot, but I'm actually hoping that it does sell off so I get at a better cost basis, so that when I did get shaken out of that Biden tax report, I feel a lot better of myself. But regardless, if we did break down, I'm full disclosure, I'm probably gonna buy like 50K worth of PLTR. But until that happens, until that earnings report, I probably won't touch it. But people that do like to trade PLTR, it's getting very tight here. Okay, so just keep that on watch for the break. Yeah, I mean, if I were to suspect, right, probably just consolidate back down, and then this is going to be key wherever it goes, up there or up down or down here. But anyways, that's my watch list for the week. Again, guys, we're here to make some money. Don't overtrade. Don't chase buy dips. You gotta do the minimal, right, to make sure that you keep your equity curve continuing to run up. You don't want to overtrade and continue to trade, things that you don't have anything on your radar or your watch list. Just because you made some money doing some random shit before in the past doesn't mean that it's gonna always give you that nice return. Doing that random shit, it's better for you to be prepared, having a stop loss, having a price target, and then just watching all these tickers that you do on a daily basis. That's going to probably help you in the long run as a trader. Of course, all the resources in the chat room that you can also utilize, right, to get yourself more edge, higher conviction plays is going to help you in the long run. But that's it for me today for this week, weekly's watch list. And good luck to you guys. Good luck this week, guys.